My name is Ross van Coller. I cover the Naspers and Prosus company for our PSG Wealth portfolios, as well as some healthcare and offshore tech at the moment. We're going to dive right into it. Our last presentation was towards the middle of December. So a couple of things have changed, not too much, but I'll touch on those in a second. So in the last few months, or let's call it a few weeks, we obviously saw a decline in the Naspers and Prosus share price on the back of Tencent getting added to a list of Chinese military companies by the US. This had quite a material impact. Shares were down about 10%. In the broader scheme of things, it's more of a sentiment announcement. It doesn't really affect their revenues or anything like that, but it just comes to show the political play that comes into Naspers when it revolves around Tencent. Outside of that, Prosus acquired a Latin American online travel agency called Despaga for about $1.7 billion. That will add about $700 million in revenue and about $100 million EBIT for Prosus, but pretty immaterial in the grander scheme of the revenues and the income. And then just to go a little bit further back, they sold out their stake in Trip.com and Swiggy Limited, listed in India, for about $11.3 billion US. The first half of 2025 results came out in December, so it's a little bit stale at the moment, but I'll touch on that in a second. And then as far as our valuation goes, not much has changed. We had a slight decrease for both of them. Previously, we had a bit of downside, but due to the share price movements, that comes more or less in line with our whole recommendation, and that's basically just on market movements.